Alrighty guys, let's use some real life examples and explain the concept of credit and how it applies to a formal credit system. So let's just say you're a kid and you walk into a store and you wanted to buy something. It could be a new shirt, it could be a new shoes, candy, almost anything, right? But you didn't have enough money to purchase that item. So what do? You go back to your parents and you beg them and ask them, hey mom, can you please buy me this new shirt? I really, really want it. But you don't have the money. So they say, look, I'll make you a deal. Buy the shirt from me right now and you can take it out of my allowance. Well, guess what? That is some of a form of credit. On the other end, let's just say you go to a restaurant with your friend Jimmy and you guys have a nice meal. When it comes down to paying the bill, you forget your wallet at home. You say, hey, Jimmy, please help me out. Please take care of this bill. When we get back to the house, I'll go ahead and pay you back my share of the bill. Well, guess what? That's also another form of credit. So if you pay back these loans in a very timely manner, you build trust with your parents, your friends, etc. So this trust will help you build your reputation and increase the chances of you borrowing money at a later date. So this is the exact same concept of a financial institution such as banks, which will determine whether or not they're going to help you and extend credit. So these companies will review your credit report and use your credit history to determine if the loan that you are wanting to borrow is worth, or the risk factor for them to repay or to issue the money for you. When they issue you this loan, they're going to want some form of interest along with the money that you're borrowing. So if now, while we're discussing this, through these examples, if certain words like the credit report or credit history or credit scores doesn't really make sense, trust me, we will cover this in further slides of this lecture. So to further along why credit is important, let's just say you're a business, right? And the use of credit, especially when you're starting up a business or you're an established business, it allows you to use it as a tool when you're trying to grow. Let's just say you want to purchase some machines or some goods or services, and a business lender is going to look at your personal credit along with your business credit to dictate if they're going to lend you that particular money for that good or services. That's a very important key element to grow, especially if you're starting up as an entrepreneur. Now, if we want to relate that to the consumer side, credit is the foundation of everything. So if you are wanting to, make some necessary purchases, it doesn't matter what it is. It could be personal goods, cars, etc. Credit will be the foundation of looking at the likelihood of them lending that to you. But let's just say you also want to build wealth, right? And you came from nothing. I essentially started my business, and I didn't have anybody who provided me a nice little blank check to help start, the company. So what did I do? I had to rely on my personal credit and the banks to loan me the money to help me build my personal wealth. So it could be a good leverage tool to get you to that next level. And let's just say that you had an accident, right? You were in a car accident and you need some money to help you with the medical bills. And if you don't have that money currently in the bank account, but you do have good credit, that could be a saving grace of you solving this issue with any type of emergency expenses. And so all this information, either if it's business or consumers, it all gets reported to 3 different locations, what we're going to call the credit bureaus. So now let's get into some credit terms, which will be important to understand throughout this course. So the first one is what we call a creditor, which can offer different forms of credit. Some of them are called, lines of credits, term loans, mortgages, and or auto loans. Next is your credit scores. So a credit score is a grade that's assigned to you that signifies the willingness and ability for you to repay a debt, which also allows lenders to make an instant judgment about your ability to repay. So the higher the credit score, the more likely you're able to pay back that loan in a very timely manner. But if you mismanage your credit and earn a poor credit score, you'll most likely be able to qualify for either high interest rates or poor terms. Next is your credit reports. It's a statement of information about your credit activity and current credit situation, such as paying back a loan, the history of repayment with all your accounts. Next is your credit bureaus. Now, these credit bureaus or reporting agencies collect information about your credit worthiness and determine your individual credit score. So whether you're playing the game or not, the 3 credit bureaus are continuing to keep score.